Hey everyone, and welcome. We're going to cut through all the noise and the jargon. In the next 5 minutes, we're taking a whole bunch of raw market data and turning it into a clear story about where the global economy is at right now.
So, the source material for all this came with well, let's call it a pretty ambitious request. A 40-page expert report? Seriously? It's the kind of thing that makes you just want to give up and go watch cat videos instead.
And yeah, exactly. Who has time for that? Our goal here isn't to put you to sleep with a textbook, so we're ditching that whole dense report idea to get straight to what this data is really telling us.
Okay, so let's dive in. To figure out where we are now, we first got to look at where we've been. So, we're going to kick things off with the big picture, the major trends that have been shaping the markets for the last 12 months.
And wow, what a year it's been for some. Let's start with a massive top performer, silver. Just look at that number, a staggering 147% gain. That is an absolutely explosive performance, putting it right at the top of the charts. But, for every big winner, there's always a big loser. On the complete flip side of that coin, we have US cocoa, which just fell off a cliff, cratering by over 66% in the exact same time. It's a pretty stark reminder that the market definitely does not move in just one direction. And this table here really tells the whole story perfectly. I mean, on one hand, you've got assets tied to precious metals, like a gold miners ETF, just skyrocketing, an unbelievable 422%. But then on the other hand, you've got assets tied to energy in certain regions, like a crude oil ETF and the Russia ETF, and they've just been decimated. Now, these aren't just random numbers. They're echoes of huge global events, everything from inflation fears to geopolitical conflict.
Okay, so that was the year-long marathon. Let's zoom way in now to the daily sprint. What does the market feel like today? This much shorter time frame gives us a real sense of the current mood out there.
Over in the US, it's a bit of a mixed bag today. The NASDAQ, which is loaded with tech stocks, is up over 0.5%. Pretty good. The broader S&P 500 is also in the green. But then the Dow Jones, which has more of your traditional industrial-type companies, is actually down a little bit. It's like the market has a split personality, cautious in some spots, optimistic in others.
And you can see that daily back and forth everywhere. Take silver, our huge yearly winner from before, well, it's also on fire today, up almost 7%. Meanwhile, a retail giant like Walmart is having a pretty rough day, down over 2.5%. It really just goes to show you that even the strongest long-term trends have their daily ups and downs.
So, how in the world do we make sense of all these different movements? You've got some things going up, some going down. It can feel kind of random, right? Well, it all comes down to a really simple way of understanding how investors think, where they're putting their money, and why.
It really just boils down to two basic feelings: optimism and fear. When investors are feeling good about the future, we call it a risk-on environment. They're happy to buy assets that have high growth potential. But when they're getting fearful, it's risk-off, and everybody basically runs for the hills, seeking out assets that are considered safe.
And here's exactly how that idea connects to our data. Risk-on assets are the big stock indexes like the S&P 500 and the NASDAQ. They do great when the economy is expected to grow. Risk-off assets, on the other hand, are the classics: gold, government bonds, and even this thing called the S&P 500 VIX, which people actually call the fear index because it measures expected choppiness in the market. So let's put all these pieces together. We have the long-term winners, the daily mood, and this whole idea of the flow between risk and safety. So what's the big message the market is trying to send us right now? I mean, just think about it. We've seen these massive year-long runs in classic risk-off or safe assets like gold and silver. At the same time, our data shows that a lot of the big tech stocks, the darlings of the last decade, have been struggling. So, is this just a temporary blip? Or is the market signaling a major shift in the global economy? A change like that could rewrite everything from the leaders on Wall Street to the very nature of our economic recovery. And that, right there, is the billion-dollar question the data leaves us with today.